The purpose of this presentation is to explain the effect that COVID-19 will have on the fiscal year 2021 budget. There's a few things to explain first. The county manager is required by state law to submit the proposed annual budget to the Board of Commissioners no later than June 1st. The Board of Commissioners are required by state law to review and approve a budget by July 1st. Simple enough, right? Not so fast. A critical component of any budget is knowing what? You guessed correctly. You have to know how much money you are going to have to spend. This is called revenue. One other important piece of the pie is that local government budgets have to be balanced. What does that mean? This means we can't have a deficit. We can only spend what we project to have. In the current fiscal year 2020 we projected that the revenue would be $159,883,238 and this includes a fund balance appropriation. This year we projected that sales tax revenue would be $26,300,000 of the $159,883,238 budget. This makes up 16% of our budget. Sales tax proceeds take approximately 3 months to make their way back to the county. So, the governor declared a state of emergency in North Carolina on March 10th and the stay-at-home order didn't take effect until Monday, March 30th at 5 p.m. With that in mind, let's take a moment to follow the sales tax dollars. Suppose you went shopping in March. You selected your items that totaled $100 and paid the retailer $107 because the state sales tax is 7 cents per $1. The retailer submits a return and remits the $7 tax by April 20th. In the month of May, the North Carolina Department of Revenue performs calculations and prepares allocation. The county then receives the revenues by June 15th. According to the North Carolina County Commissioners Association quote, "The economic and revenue impact of the COVID-19 pandemic is both severe and uncertain. While it is still very challenging to paint a complete picture, Wells Fargo reports that early economic data show retail sales dropped -8.7% in March, which does not account for certain discretionary spending or all personal consumption expenditure changes." Many economists, armed with public health modeling and information, have started to look at possible economic recovery paths. Morgan Stanley projects a shallower rebound in the third quarter and reviews the public health measures that will support a confident return to work in the country. End quote. How does this affect Rowan County's financial outlook? Well, let's take a look at how a sales tax decrease on an annual basis would affect Rowan County. If we project a 10% decrease, we will lose $2,630,000 for fiscal year 2021. A 20% decrease and we lose $5,260,000. A 30% decrease and we lose $7,890,000. You get the picture? What are we to do? What is the manager's projection going to be? Those are great questions. We must understand that the projection is going to be a guess. Simply put, we do not know what the impact of COVID-19 will be on the upcoming budget. Regardless of the projection that will be released before June 1st, we have to prepare for the uncertainty. The first step in doing this is to implement a hiring freeze. The purpose of this hiring freeze is to limit expenditures and is one of several cost-saving measures that the county will be implementing. County leadership's main goal in weathering this storm is to do everything we possibly can to maintain services to citizens, while ensuring that benefited employees don't lose their job and continue to receive health care coverage. While we understand this will be difficult, we remain hopeful that these conservative measures will be short-lived and Rowan County remains committed to providing excellent services for our citizens. Special thanks to Kevin Leonard, the director of the North Carolina County Commissioners Association, for providing information to make this presentation possible.